This is the Law of Money with me, Vivek Law. Joining me today is Yashish Dahiya, founder of PolicyBazaar.com, who revolutionized the way we buy insurance in this country. Now that we know that we need insurance and we know when we need insurance, the next question, Yashish, is how much insurance do we need? How much is necessary?
A health insurance cover is for life. It's not for 1 year. You're going to have to purchase it and use it all the way till you're 80, 90, 100. And you have to imagine what will costs be like. See, today I am 44. What will costs be like when I'm 80? That's 40 years from now. So we're talking about 2055. Long way off, right? But what will the costs be then? And I better have an adequate cover for then, otherwise I'll be sorry. That's the time when I'll be most using it, by the way. So as much as I can get. But if there's affordability issues, which there will be for everybody, then one has to make a fine balance. Maybe not a cover for everything, maybe critical illness, maybe accident covers, maybe top-up covers. There's beautiful top-up covers.
Maybe keep enhancing it every year as your income rises.
Maybe put a voluntary deduction in it, right? Because the point is, I may say, up to 50,000 rupees, I'll just pay. It's beyond 50,000 rupees that I want to be covered. And I want to be covered up to whatever amount it goes to. So, and that will cost a fraction of a health insurance policy. So health insurance, my view is just structure your thinking, what can you afford, take out a voluntary deduction, go above that. Now when it comes to life insurance, this depends entirely on your liabilities. So if you're very wealthy from an asset perspective, so if somebody has, let's say 30 crores lying in the bank and their annual cost is 1 crore, they actually don't need life cover because they've got cash in the bank.
This money will go to
they can afford to self-insure. So the rich don't need life cover if you're asset rich. I think the entire piece is take your liabilities, subtract your assets, and then look at your expense versus your income. And everybody is smart enough to do a basic rule of thumb that the expense, whatever your expenses are, roughly about 20 times of that is broadly what is required. And then you can subtract your assets from your liabilities. Obviously, in assets, keep liquid assets, because if an unfortunate event happens and you have a big piece of farm lying somewhere which cannot be sold for 20 years, that will not come in very handy for your kids.
It's been a pleasure talking to you, Yashish. Thank you very much for coming on the Law of Money to demystify insurance.
Thank you very much.
We'll keep this conversation going.
Thanks.